Vijay, thank you so much for joining us. I know you've been doing back-to-back interviews, and we got to touch base with you in the morning, and now we're through the day. There's so much more to talk to you about. I mean, first of all, your own stake now as an individual shareholder in the company has gone down. Tell us a little bit about that. Why, how it feels, how your role's changing, what this means for you.
First of all, I would say that my role over the period has matured from being, let's say, a product manager, engineering manager, to a business manager, and now to a dollar allocation, meaning the budget allocation and reviewer. So, one thing that probably a maturer company brings to our entrepreneur is that there is a different kind of skill required. I mean, we are I could call it that you have to look like an investor because the teammates are running independent businesses and how much money you are allocating instead of being like a executor only. While I do believe that there is a continuous obligation of me to execute.
Hmm. Okay, interesting. So tell me, when you are looking at the overall picture, and there's been so much talk about how, Paytm has evolved from payments to multiple financial services, but can you actually follow through and have that bouquet become a sustainable model?
Yeah. So, Abba, the core business model of Paytm is that we bring the customer on our platform, whether consumer or merchant, using the
Yeah.
payment as a mode. So, consumer come on our platform, merchants come on our platform, and for the payment. Then we mature them, give them commerce and financial services. Now, commerce is a straightforward math because partner merchants will sell something, and this is commerce, and we offer them software. So that business is any which ways come $100+ million anyway sizable. Then the financial services come. The keyword here is that one thing that I've learned is that financial services distribution is challenging in this country for two big reasons.
Hmm.
Number one, that it is costlier to acquire a customer, regulatory obligations, reach, trust, it's trusted channel only. I mean, it's not something that you can distribute, let's say, a shampoo or a soap. It's extremely complex because you have to be very sure whom are you bringing on a financial system. So KYC, AML, etc., regulatory obligation make it costlier and complex. Second is that typically traditional financial companies have stayed away from this for a very reason that it does not serve
Hmm.
commercial motive for that company to acquire this customer. Now, that is something that we are able to crack because technology enables us to acquire customers at a lower cost, and technology enables us to serve the customer at lower cost. So, we believe that we will be able to bring about a change in formal financial service distribution in this country. Paytm in next 5 years can comfortably be the company that would be able to bring distribution of formal financial services to nook and corner of this country. And we want to be the change agent, we want to be the acceleration agent, and
Right.
we will be able to do it.
And you have been saying it, Vijay, and today I'm seeing you launch your IPO, and I know it's a proud moment. There are always questions around the business model, of course, and I'm going to take this one by one. Let's talk about lending, right? And I know that that's a growing vertical for you, but you're working with partners here. It's not where of course you're taking on those loans at the moment, at least, unless you have other plans going forward. So what's the business model there? How do you see that evolving? Because isn't the bigger opportunity, if one was actually to be taking on the loans, does working with partners provide the same opportunity?
So, Abba, there are two ways to think of a business. One is to expand the addressable market, or another is to expand the depth of a particular customer. Meaning, how do you make money from more number of people and small money, or large money from fewer number of customers? So, banking typically is that they own the book, and credit is more, they own the book, they make most money per customer, they repeat sell it, and so on and so forth. In our business model, we found out that if we want to call ourselves that altruistic change agent to bring financial services, you need to serve 100 million, 500 million people, and that cannot happen on any single credit partner's book, even if that credit partner or company was affiliate or a business in our own selves. So we are clear about it that we are here to build a business model of distribution and technology support to financial institution, credit institution. That gives us an edge here that we not only can serve large number of customers, we also can make optimum amount of money. I mean, there is a lot money that is left on the table thanks to the book being owned by the book owner and then the credit risk owned by them. But at the same point in time, we believe that we'll be able to serve a larger number of customer base, which is our mission. So you are right that we are leaving money on the table, but also we are leaving money so that we can bring number of customers that get credit disbursed through our platform, much larger number.
So then my next question is Vijay, in terms of the competitive landscape and the fact that this area is becoming fairly crowded, and I know you're smiling. But look, you were first in the payments game, and you've been evolving. But in these last few years, we also seen a whole bunch of other well fortified players coming into the space.
So considering that India is underserved, considering India is moving from traditional distribution to a digital or smartphone distribution, considering there are new products that are yet to come, I do believe that success of Paytm is not contingent on somebody else's cost. It is because the market will give way to everybody to highs. We don't. We are, Paytm success is not zero sum. It's a whole sum. It becomes bigger. In other words, competition that is increasing increases the market opportunity for everyone. Otherwise, the customer was not even there. If we were addressing the same customer, if we were addressing the same product, it could have been. For example, like issuing a credit card as a bank is a very clearly a niche customer base and a niche kind of thing. So they keep swinging from one bank to other or one offer to other. But if you offer different product altogether as a personal credit or personal spend credit and EMI, etc., you bring a new customer base. So, Abba, I don't think that any, whether fintech or traditional institutions like bank and PFC, should ever feel that Paytm's growth will reduce their opportunity, because we will amplify their opportunity and together they amplify our opportunity.
Okay. Now, in terms of the valuations, what's your answer to the market? I mean, from what you're saying, yes, there's an opportunity, but it's going to take time. We've already seen the kind of money that's been burnt in building that opportunity, right? So, what would you say to the kind of valuations that you're also trading at or
So,
commanding in the market?
so first of all, valuation is not something that as a company we offer any
Of course.
guideline input.
Yeah.
Secondly, we can tell that I can tell what decision I was taking when we were discussing the valuation. We had the range that is publicly disclosed, and number of times many range, meaning tens of percent. I had multiple options. We chose deliberately this so that we can make many more people to participate and as many people to participate and make money. So we deliberately chose a lower price, which is incidentally in your context a high price, while we from the anchor roadshow that we did were able to see demand at a much higher price. So I believe that as a company, I don't have a comment to make how the pricing is, because pricing is more of an analyst and investor's call. I can only say that we had demand at much higher level than what we are giving this number.
Okay, so in terms of a retail shareholder, people looking to get a piece of the pie, your employees, and I know you expanded stock options, like what is going to be the kind of implication for them? How many employees do you see becoming millionaires overnight? To sort of generalize, but give me a sense of that, and is there going to be enough for retail shareholders in the sense that there's two different questions. One, what does it mean for employees? And two, with existing investors selling so much stake, right? Is this the case where it's more of a secondary issue with it?
First of all, there is an obligation of a particular percentage of dilution. If we
Yeah.
were to keep this price and keep all amount primary, the amount would have been so large that we did not even need that much amount of capital and dilution obligation.
Okay.
So we went to obligate, and then secondly, we are professionally managed company, so we had to get number of shareholders below 25%, and that means we had to call everybody and give them opportunity to sell. And surprisingly, we had to ask them to sell. I repeat it, we had to ask them to sell so that we are able to create a balance of dilution obligation and secondary sale. Because if a company is going IPO and you come literally 1 or 2, 3 years back, you're not going to sell. So if you notice, of the 100% of people we went to ask to sell, only 70% chose as a intention that we will sell. So we had to even ask more number of sales to sell. So number one, that is clear about it, that we believe that it's an incredible opportunity for employees, because employees which do you know that we have given liquidity more than 2,000 crore of ESOP liquidity has been handed over to our employees, which is a rare for a company in a private space and rare for an Indian company. And that's like 2,000 crore. So number of millionaires and multimillionaires we've had are really large. And I believe that there will be in thousands multimillionaires. I mean, in thousands. I mean, this is something that I'm very proud of. I benchmark our success as how much of success people we've created, how many companies, entrepreneurs we've created, how many people have made money, how many investors have made money. So IPO will potentially give them an opportunity of a liquid stake, which will give them an opportunity to champion cause of Paytm. And finally, even more important thing, IPO's liquidity will bring a currency to Paytm to recruit the best talent in the world, which typically international companies recruit in India and offer cash RSUs. So if you see Western tech behemoth, which they open its office in India, they suck hundreds and thousands of people, and they offer cash plus equity, cash plus equity, cash plus equity. Now Paytm can legitimately do it. So we see it as a edge over others in our recruitment planning.
Okay, fantastic. So, Vijay, between payments, lending, etc., your all your various divisions, where is the maximum traction? What's exciting you the most now going forward?
I think the payment is underestimatedly. I mean, we thought that payment is going to grow organically at a particular pace. The
Hmm.
pace of growth of payment is growing in India.
Okay.
That is surprising. And second is that what is exciting me is that credit is a complex business because who's the credit partner? What is the customer experience to crack? I think we've been able to crack it. That is incredible.
Okay, fantastic. Vijay, thank you so much for joining us.
Thank you, Ava. Thank you.